What's up, guys? Welcome to another investing video, and in this video we're going to be talking about share market indices, and I'm sure you're going to find it useful in your investing journeys. If you haven't already, make sure you check out my previous videos that explain some really core fundamental concepts about why the share market exists, how it functions, and a lot of the numbers behind understanding any particular stock. Now, in one of my previous videos, I actually talked about the VWAP, which is the volume weighted average price. It was quite a long technical video. You probably found it quite boring if you watched it, but hopefully you found it informative. And it's actually it is relevant to what I'm going to be talking about in this video, which is share market indices. So indices is actually the plural of an index. I apologize again in advance for my horrible handwriting. Now, in Australia, there are two main indexes, which is the ASX200 and the All Ordinaries, which is often just simply referred to as the All Ords, well, with an S. In America, the two most common ones are the S&P 500 and the Dow Jones. That is a D, not a P. The Dow Jones, okay? And these are all indices. But what are they? What actually are they? So I'm not going to go into all the detail about how you actually calculate them in meticulous detail, but essentially they kind of are a VWAP, a volume weighted average price. So let's actually start with the ASX 200. It's sometimes quoted as the actual proper name for it is the S&P ASX 200 or ASX S&P 200. The reason is because S&P actually are the ones who manage it and quote it and calculate it. S&P stands for Standard & Poor's. They are a company. They are a private profit-making company. They're, I believe, an American company. So they're the ones that actually manage the index. Now, what this actually is it captures the top 200 companies in Australia, listed companies on the share market based off market cap, so their market capitalization. Okay? And what it does is it essentially takes a volume-weighted average price. So what it actually does is it looks at all of those top 200 companies, and those 200 companies go into forming that index. Now, the key here is that it is volume weighted. So all of those 200 companies, they don't have 1/200th of the index. They are actually based off their size, right? So some of the, and I don't know the exact number, but what you might actually find is the top 20 companies actually make up 80% of the S&P ASX 200 movement. Just good old Pareto principle. So what that actually means is that if some of the really large companies on the Australian Stock Exchange, like BHP, Rio Tinto, Commonwealth Bank, CSL, these kind of companies, they move the market a lot. So what you actually see as of the time of this video, so it might not age well, but iron ore is just going through the roof. So the price of iron ore is now above $200 US a ton. So all of the iron ore companies like Fortescue Metals, BHP, Rio Tinto, their share prices are just skyrocketing. And they are all big, large companies. So as a result, they're moving the market a lot, and they're moving the ASX200 a lot. And what this can actually do is kind of distort things, because maybe the rest of the market actually isn't doing that well. And again, as of the time of this video, the banks have just reported their earnings. Their earnings were all quite good. The big four banks in Australia, they again have large market caps, so they can influence this ASX 200 quite a lot. But again, what it essentially is, it's a volume-weighted average price of the top 200 companies ordered by market cap on the Australian Stock Exchange. So again, the bigger the company, the larger the influence it might have. As I said, I don't know the exact number, but you might look at, say, the biggest company, and it might actually make up, again, not 1/200th, it actually might be 3 or 4% of the index. So that's what the ASX 200 actually is. I hope that makes sense. If it doesn't, leave a comment. Now, the All Ordinaries is the entire market. It is the entire market. Now, as of the time of this video, I believe the ASX, the Australian Stock Exchange, has roughly 2,200, might be a bit more. It's a bit over 2,000, maybe between 2,200, 2,500 companies listed. So, and a lot of those companies, they're pretty small. They might only be worth 20 million, 25, 30 million, right? So they're pretty small. Anything in the top 200, I mean, it's ordered from, top number 1 to 200, but typically they're all roughly billion-dollar companies. The last few in the ASX 200 are probably sub 1 billion. So they might be, 800 million, but they're all very large companies, okay? So the ASX 200 and the All Ords are always slightly different, because even though the ASX 200, the ASX 200 pretty much captures most of the market, because if you actually look at the market cap, if you actually sort of graphed it, you might have, if you had these companies, largest to smallest, and you actually had, market cap here, what you would actually find is probably, and I'm just sort of, I don't know, making this up sort of thing, but, it might sort of be like this. And so this might actually be your, 200 largest companies. And so it's, and actually, to be quite honest with you, it's probably even more skewed. I haven't captured that very well. It's probably more like this. And so, your top 200 are, I don't know, maybe somewhere like here. So this is your ASX 200, right? So it actually captures most of what the market is doing. And then, so all of this is the All Ords. And this is your ASX 200. And then this part here is going to be the difference between these two here, the ASX 200 and the All Ords. So on a given day, the ASX 200, it might say, it's up 1.1%, and the All Ords might be up, 1.15% or something. It could be it could be higher, it could be lower, but they're similar, but they're not quite the same. So it's just an indication. What is the market doing? So the All Ords is really a more accurate way, because it actually captures the market. But in some ways, the ASX 200 is actually more accurate, because, a lot of these smaller companies, they're not necessarily a great indication of what is happening in the economy. It might be very company specific, right? So a very small company, if they sign a new client, their share price might double. well, that's not really indicative of, you know, the economy magically getting better overnight. So, and most share and a lot of fund managers, so your superannuation fund, they only really touch this stuff, the ASX200. Now, in America, the S&P 500 is basically exactly the same thing, but it's the largest 500 companies on the American Stock Exchange. Okay, the American market is much bigger than the Australian market, so there are a lot more companies listed on the New York Stock Exchange, but it's essentially exactly the same thing. It's probably the most quoted indice around the world in terms of share markets. The American share market is probably, well, it is the most important, certainly at the time of this video. So, you know, investors all around the world will see what happened in the American markets overnight, and that's the S&P 500. In recent years, the Nasdaq has got a lot more attention because the Nasdaq has a lot of the technology companies, but still, the S&P 500 is a very key indice. Now, the Dow Jones is kind of a weird one, actually. It only has 30 companies in it. It only has 30 companies. And from memory, they are sort of 30 chosen. They're not necessarily the largest 30. So as an example, Berkshire Hathaway is a company run by the very famous investor Warren Buffett. And Berkshire shares, one Berkshire share is worth hundreds of thousands of dollars. So it's a very illiquid stock. There's not much that actually trades of Berkshire Hathaway stock A. So even though it is one of the largest companies on the New York Stock Exchange, it isn't actually in the Dow Jones index. But generally speaking, it is the 30 largest companies, which is kind of surprising in a way that the Dow Jones does get quoted so often, because it is literally only 30 companies. But if you actually looked up the 30 companies that are in there, you should know most of them. There might be a couple that you might not have heard of. You know, they might be, I don't know, material companies, or you know, ones that you might not have had directly. But you know, most of them are sort of household names. You know, Coca-Cola, GM, GE. You know, some of them might have dropped off by now, but you know, like General Electric, and you know, really sort of kind of household names in America, banks, those kind of companies. So the Dow Jones isn't actually a great indicator of what the market is doing. It's really more at least in America, the S&P 500, and in Australia, the ASX200. Now, there are all sorts of indices around the world. Every stock market will have its own indice. There are also sub-indices. So the ASX, the Australian Stock Exchange, also has like ASX20, ASX50, ASX100.